Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. It's 10 p.m. on November 6th, and apparently it's Super Drama Sunday today. The first story came out at the tail end of last week, and I didn't jump on it because I wasn't sure if it was done cooking yet. And boy, howdy was I right. Okay, so here's what's up. CoinDesk put out an article last week, and this article is about Sam Bankman-Fried and FTX and Alameda Research. So SBF has been in the news a lot lately, especially his championing of crypto-related legislation and potential changes to DeFi that he suggested on his blog. He's taken a lot of heat for that. That went back and forth for a while and ended with SBF bending the knee and saying that he won't be pushing the crypto agenda anymore. So, just as things are starting to cool off from that, we've got beef between SBF and CZ, with supporters taking sides. Now, this article came out on CoinDesk that takes a close look at Sam's empire, as they called it. His empire is broken into two parts: the trading side, which is Alameda, and the exchange side, which is FTX. Now, granted, he's got a bunch of other projects, but those are the two big pillars holding up the rest. And they're two separate, discrete businesses, except in one area. And that area was leaked to CoinDesk. It's Alameda's balance sheet, and it's got some tongues wagging, because apparently Alameda had $14.6 billion in assets as of July 1st. Which is a ton of money. That said, it looks a little shaky to some folks because a lot of that $14.6 billion comes from FTT. Now, FTT is the native token to the FTX exchange. This is all fair and above board. Legal, but sketchy. Because that means a huge part of SBF's empire is held up by the FTT token. That right there should merit attention. Not because there's anything specifically wrong with it, but it is precarious. If you have all of your value denominated in a single cryptocurrency that you created, not fiat, not some other asset, that's a little sketchy. And so it appears that Alameda is holding $3.66 billion worth of, quote, unlocked FTT. And that is their single highest asset. Their third highest is a chunk of FTT collateral, as they call it, worth $2.16 billion. And as far as liabilities go, they're holding $8 billion, and $292 million of that is in locked FTT. Corey Clipston is the CEO of Swan Bitcoin, and Swan Bitcoin is an investment platform. He said, quote, "It's fascinating to see that the majority of the net equity in Alameda's business is actually FTX's own centrally controlled and printed out of thin air token. At present, there's roughly $5.1 billion worth of FTT in circulation. That said, FTX has a rolling burn program set up. This sees the exchange burn a third of their trading commission until half of all FTX tokens have been burned. So what did we get out of this? Well, a lot of the value behind Alameda comes from FTT, and FTT is a token made up to service the FTX exchange. It has no other utility, which means this entire thing is dependent on how successful the FTX exchange is. Because without the value of FTT propping them up, Alameda's wealth profile changes substantially. Now, adding to the excitement is Changpeng Zhao, Binance's CEO. He kicked things off on Sunday morning with a tweet that he was liquidating Binance's position in FTT. And in his tweet, he didn't say specifically why he was doing this. He just referenced, quote, recent revelations that have come to light. Now, keep this in mind. Binance got roughly $2.1 billion worth of FTT and BUSD last year. This was part of their exit from equity in FTX. They bought into that position in 2019, so it's been quite a while, actually. And if you think about it, you can see why. There are a lot of things resting on the value of this one token. So CZ is expecting to take a few more months to do this sale for a couple of reasons. The biggest one, of course, is limited liquidity. On Saturday, they moved almost 23 million FTT to Binance's exchange. That's 17% of the total circulating supply. They can't just dump that on the market. It would wash away any value, and they would end up crashing the market and not end up getting hardly anything anyway. CZ did confirm, though, that the transfer was part of the plan to liquidate their position. That whole crashing the FTT market thing is a very real possibility. FTT dropped almost 10% over the last day or so, hitting a bottom of $22 each on Sunday. Now, how many loans are there using FTT as collateral? I'm going to guess that there's a lot. So if CZ just dumped all that FTT on the market, especially since there's next to no liquidity for that token, it would be kind of like what happened with Three Arrows Capital. All those loans that are using FTT as collateral would be liquidated. Death spiral. So that was probably what was on Caroline Ellison's mind. She's the CEO at Alameda Research, and she made CZ a direct offer to buy all the FTT he wants to sell at the price of $22 each, which was the low price on Sunday, which would make sense for him to do, as it helps prevent crashing the market as well as gets him his money back all at once. Now, Ellison, for her part, has responded to the rumors around Alameda's finances. She said the company is holding $10 million in assets that are not shown on the leaked balance sheet. She said Alameda had other hedges in place and that they've paid back the bulk of their outstanding loans. One of the other assets held by Alameda is Solana, $292 million in unlocked SOL, $863 million in locked SOL, and $41 million in Solana collateral. This is not at all surprising, because not only has SBF said that he thinks Solana is underrated, he was an early investor. And all of this is happening right in the middle of Solana's breakpoint. That's a 4-day conference that runs from the 4th to the 7th of November. And one of the big announcements came out not from Solana, but from Google, specifically Google Cloud. And it really all started earlier with a tweet. And this tweet said, "Should we tell our followers the big news?" And they tagged the co-founder of Solana Labs in that tweet. An hour later, Google Cloud came back with another tweet, quote, "Now that we've got your attention, check this out. Google Cloud is running a block-producing Solana validator to participate in and validate the network." So, not only is Google going to run a validator on Solana, they're also adding features meant to welcome Solana developers and node runners. They've also revealed something called the Blockchain Node Engine, and it's a fully managed node hosting service that's run by Google. Currently, it does support the Ethereum blockchain. Google plans to expand that to Solana in 2023. Nellen Middle is Google's Web3 product manager. He said, quote, "We want to make it one click to run a Solana node in a cost-effective way." Now, Google also announced that they were going to be indexing Solana data as well as adding it to their BigQuery data warehouse. They said that this would make things easier for Solana devs to access historical data. This feature is expected to be in the first quarter of 2023. Now, Middle also announced that Google Cloud will be welcoming select startups in the Solana ecosphere to the credits program. He said that there were $100,000 in cloud credits available to successful applicants. Shortly after that, Solana pumped 15% on the news. And this comes after news broke Wednesday that Hetzner Online has decided to block all Solana activity on their servers. So this means they kicked 1,000 validators offline in an instant. Now, these nodes have been largely brought back online, but some people see this as a big problem. There was a discussion about the amount of influence that centralized providers like Google and Hetzner have over supposedly decentralized networks. 40% of Hetzner's validators and 20% of their stake were housed on Hetzner, based on analysis done by Google Cloud engineer Sam Padilla. Even with that big chunk gone, it wasn't sufficient to bring Solana down. You'd have to take down 39% of their total stake. And while the consensus mechanism and network activity all worked as designed, it still does raise a question about the reliance on outside providers like Google and Hetzner. Now, the role of validators is based on staking, as Solana is a proof-of-stake blockchain. And so the node operators had to scramble to find some place to set up shop. Because remember, if 39% of that staked value went offline, then the network would have crashed. A representative from Solana Foundation said that ultimately, This would not significantly impact Solana's health because there were several alternatives available. They said, quote, "This decision by Hetzner was certainly unfortunate, but not entirely unexpected. There are hundreds of data centers that Solana operates out of, so those impacted are migrating to new locations." They've also talked about the Solana Foundation's server program. This is a matching service between validators and vetted independent providers. Even so, the ease of use makes centralized companies like Hetzner and Google very attractive for hosting purposes. And there was really no surprise. We covered it here in August when Hetzner started banning Ethereum nodes. So there should be no surprise that both Cardano and Cosmos were also looking for new service providers, because they also rely heavily on Hetzner. Now, Hetzner is the number 2 service provider for Cardano nodes, and so they're looking for alternatives before those nodes get banned too. Now, let's shift from nodes to phones, because the Solana connection continues with the Helium network. If you remember recently, the Helium network decided to abandon ship where they were and move their platform to Solana, which we covered here a bit on the show, and frankly, I was surprised to hear it. Well, that partnership is about to get a whole lot tighter, because not only are their business plans intersecting, in some places they're merging. Now, this also was at the Solana Breakpoint conference I was talking about, and that's where they announced that Helium and Solana, they have a new partnership. They're going to launch Solana's Saga Smartphone on Helium's mobile service. Helium Mobile is powered in part by T-Mobile. So this partnership means that Saga Phone will come with a 30-day trial for Helium Mobile, at least if you're in the United States. And this service offers unlimited voice and text use. Now that said, the Solana phone is not locked to Helium's network. Boris Rensky is a general manager of wireless at Nova Labs. Nova Labs is a core contributor to the Helium network. He said the partnership is a natural fit. Quote, "Not only will this partnership ultimately drive usage to the Helium network, but Saga customers who sign up for Helium Mobile will be able to have a seamless and integrated user experience and could earn crypto rewards for using their cell service." The Saga phone was unveiled back in June. It's expected to be a high-end Android phone with a price in the neighborhood of $1,000. It's built on the Solana mobile stack. They put together a software bundle that enables mobile Web3 apps. This means that the phone could be used for crypto payments as well as an NFT wallet. The phone is expected to launch in 2023. So we've got Google Cloud thing launching in 2023. We've got the Solana phone launching in 2023. We've got a Euro-backed stablecoin launching in Solana 2023. Because also representing at Solana Breakpoint was one Marcus Borston. He's Circle's director of engineering. And he said that there's a lot of enthusiasm from Solana's side of things to see this stablecoin launched. He said that FTX would be supporting deposits and withdrawals of the Euro coin on Solana. Additionally, Solana's DeFi protocols, Radium and Solend, have announced that they also intend to enable those same features. He said, quote, "We're really excited with the use cases that Eurocoin will unlock on Solana's ultra-fast, ultra-low-cost network, including 24/7 instant FX on-chain, as well as seamless payments in euros with Solana Pay." And he wasn't done there. He also announced that Circle's cross-chain transfer protocol would also launch on Solana on the first part of what? 2023. So this protocol is a permissionless infrastructure, and it's what allows USDC to move across any supported blockchains. It does so by burning USDC on the source chain and simultaneously minting USDC on the destination chain. Borston said, quote, "We expect a wide range of bridges, wallets, and dApps of all types to serve end users and facilitate seamless movement of USDC through the crypto ecosystem." In addition to Solana, the cross-chain transfer protocol is also expected to launch on Ethereum and Avalanche this coming January, with Solana support coming later. And that's going to do it for us on a Sunday night. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.